Hello, good morning and welcome. You've tuned into ET Now and you're watching Buy Now, Sell Now with me, Varun Hirimat, and along with me, Karunya Rao. Let's take a look at the markets this morning. We are in much better shape than we were last week. Nifty's once again up today, nearly 0.6%, 14,600. So we're scaling back towards that lifetime high. Of course, global cues have been supportive in the last 48 hours. We've had 2 days of pretty decent price action on futures and then the live market in the US. Today, mid-caps are also making a comeback. They were bleeding the last couple of days, up a whole percent today for the mid-cap index. Banking stocks also making a comeback today, and the financial services index has turned positive today after 2 days over the Friday and Monday of negative price action. We have some select stocks today that are doing well. Tech seems to be making a comeback. Wipro, Techem, HCL Tech, 3 IT heavyweights, top gainers on the Nifty. Tata Motors again, third day or second day straight now, positive price action, up nearly 5% today. Adani Ports also catching eyelids, up nearly 2%. On the losing side, what do we have? Let's take a look. NTPC down 1%, Grasim, Shree Cement, ITC, and Coal India. So broadly, the breadth is very much in favor. 39 advances, 11 declines. We're seeing action from the broader markets as well, just not the benchmark. And finally, in terms of what's performing the best today, the IT index is up over 2%. The media index is making a good comeback, up a whole percent. And the private banking index as well today, up 0.3%. Pharma also and metal up 0.7% each. So very good price action so far this morning, Karunya.
Absolutely, and in light of that, let's also make our viewers understand which are the stocks that they can perhaps keep on their watch list in today's trading session. Let's pull up the Buy Now, Sell Now stock cloud. Lots of developments, mostly news flow related counters to watch out for. The Tata Communications, they delivered their Q3 last evening. The street seems to be a tad bit disappointed with that. In fact, the same applies to ICICI Lombard as well. Street giving it a thumbs down, and the CLSA has also downgraded the stock to outperform from a buy rating. L&T Infotech, meanwhile, also delivered the numbers, but Street is cheering the report card, and clearly the stock is also reflecting a positive momentum. Ashok Leyland also joined us earlier today. They said CV down cycle is bottoming out. They aim to spend their capex more prudently going forward, and the focus will be on positive cash flows. CEAT, another earnings candidate, joined us this morning to talk about their Q3 report card. Stellar set of numbers, outlook also looking fairly robust. HCL Technologies as well as Infosys, 2 IT heavyweights to watch out for. JP Morgan has highlighted that these two remain their top picks as far as IT names go. Finally, you also have the likes of Asian Paints and Kansai and Nerolac buzzing in trade. Indigo Paints IPO opens today, and on the back of that, you're seeing some rub-off effect coming in for these two as well. Let's move right on and touch base with Gaurang Shah and Kunal Bothra. Morning, gentlemen. Thank you for taking time out and joining us today. Kunal, coming first to you, what is your reading of the markets, the benchmarks, now that we're firmly above 14,600? Do you see some more volatility that is in store for the benchmark Nifty 50 index, or can we sustainably grow from here on?
I think, Karunya, I think the last 3 days, 4 days have shown very different characteristics and behavior of the market. First, I think on Monday we had that marginal correction where the index came back almost 250 odd points, 200 to 50 odd points on the Nifty. Bank Nifty corrected by almost 500 points, and there was probably a feeling from many of the market participants that now the indices could go back into a downward drift. But then when you look at the 2 days of comeback, and specifically yesterday, I think, and then try and extrapolate this behavior of the markets for last 3-4 months from the October lows and November start, I think one trend is very clear that the bearish corrections which are happening on the daily chart basis, they're lasting for just a couple of trading sessions and not more. So till the time we don't see some exaggerated sell-off which happens in the indices, not just in terms of number of points but more in terms of number of days, I think till that time I think the market texture could remain more on the demand side. So I would expect that the index could probably gain momentum going forward, and the low which we had hit 2-3 days back, almost 14,300 to 50 odd, I think that should now act as a major support for the Nifty. Now, in that aspect, I would continue to be bullish on stocks, and 2 buy calls which I would want to recommend. The first one is a buy from the PSU banking pack, and it's a buy on Bank of Baroda. Now, we've been discussing this extensively, that how the PSU banking pack has done exceedingly well. Bank of Baroda is now on the verge of a breakout of yet another swing resistance. So, it's interesting because typically many of these PSU banking names, we've seen that they had a characteristic of sell on rallies. But this time, I think the characteristic and the behavior have changed for the PSU banks. And now it's more of a buy on dips kind of a category. So I think from current levels, I would expect Bank of Baroda to provide a breakout on the upside, a positional target of 84, expecting the stock to move up higher, and stoppers to be kept at 72. The second stock which I'm expecting, yet again, is about Tata Motors. I've been very bullish on the stock earlier as well, and I think even from current levels, the stock, which is just about making a new high for itself on a regular basis, I think should now inch back towards the psychological mark of 300 odd levels. So Tata Motors is the next high risk idea. Would suggest a buy for a target of 300 and stop us at 255.
Okay, thanks for that, Kunal. Gaurang, hi, good morning. What's the Geojit view right now on the markets, and what is your high risk and low risk call for our viewers?
Thank you, Varun, and morning to all of you all. So at Geojit, we've been firmly recommending buy on all dips for the last many months. And what has been reflected on the markets, not only for the last 2-3 days, but even if you go to take a longer view of maybe about 6 or 7 months, post the lockdown and the unlocking happened. And then from virus to vaccine, Varun, all dips have been bought into. Corrections, if any, are running or momentum corrections wherein we see the recovery in the market coming sooner rather than later. And that's what reflected even last time when we saw the correction last week on Friday. A follow-up of that correction was visible on Monday, and then yesterday we almost wiped up all those losses. So, buy on dips remains the strategy. With the earnings unfolding, Varun, at least whatever we have seen up till now for the third quarter this financial year, there has been no disappointment. And I hope that the remainder of the third quarter for other sectors and stocks are also equally very encouraging. Having said that, we believe fourth quarter is going to be even better and the next financial even stronger. On the markets, with the budget approaching, I think the way the Honorable Finance Minister has said that this is going to be a budget which we have never seen before, I hope we get delivered on that, and that will keep the markets, very attractive in terms of attaining higher levels in case if the budget is what has been told to us. Having said that, two investment ideas, one from mid-cap cement, JK Lakshmi Cement, medium to long term targeting about 380. This is purely on fallback of the infrastructure spend that is likely to come through in the budget. And of course, the private capex spending also is likely to boost cement consumption. So we believe mid-cap cement companies, of course, large caps are always preferred, but if you want to look at some mid-cap ideas, then JK Lakshmi Cement, mid to long term 380 would be the target. One more sector that is likely to throw positivity over a mid to long term period of time is specialty and agrochemicals. And over there, we have identified PI Industries. I think the stock is trading at about 22, 22.50 if I'm not mistaken, currently when I'm speaking to you. Mid target stands at about 26.50. And if you have a little bit of stretched out horizon, I would not be surprised to see the stock going towards 28 and 2900. And I would still recommend buy on dips from short to medium term. Don't wait for the budget day. As we approach the budget day, try to maximize your profit, and we might see a little bit of choppiness and volatility as the budget day approaches, that is 1st of February 21.
Okay. There you go, the top trading ideas and fundamental bets from our experts. Request you both and our viewers to stay on. After the break, we'll address our viewer queries. Welcome back. You're still watching Buy Now, Sell Now on ET Now. Time to address some of our viewer queries. Then first up is a Twitter query from Ajit Gulati. He bought 5,000 shares of Borosil Renewables at 273 rupees level and wants to know if he should buy more to average or should he exit. The buying price definitely is higher than where it's currently perched at. Kunal, this stock has seen a fantastic run up from 125, 130 odd levels all the way up to 245, 250 odd rupees, which it reached just a couple of days back. It has retreated a tad bit from those levels. Right now, trading at 249, 250 odd. What would be your advice? Should he average or just simply stay put?
Look to average. I think a better price, frankly, to average this stock. I think would be around this 220 to 25 zone. But the question is that whether the stock would come back into that zone or whether it would probably try and reverse from here on itself. What's interesting for chart patterns for stock like Borosil New is the combination of price and volume. So if you look at the price data point from the October lows of sub 100 levels, the stock, whenever the stock has seen a strong trending upside, we've seen a very huge accumulation of volumes for this stock, and whenever the stock has gone into a sideways kind of a zone, the volumes have remarkably dropped off. So we have now entered into that. In fact, we've entered into the zone for consolidation start of this month itself. So it's been almost 2.5 weeks, in 3 weeks, where the stock has consolidated after the steep run up. So it's just very close towards, I believe, ending a consolidation. You may probably get a further downtick of 10-15 rupees, but I think a better strategy would be that if you've already bought and assuming at higher levels, then I believe at current levels you can look to average. And if the stock comes back to say a 220 kind of levels, that could be a much better level for you to average it further.
Okay, Gaurang, how about you? Fundamentally, Borosil Renewables, chance of a correction anytime soon, or would you just get in for the long term now?
Well, Varun, I think this is a stock which does not really move in a short or a medium term. I think the last move that we saw, and this was I think about a week or 2 weeks back, on fallback of certain policy changes from the government side, and we saw the stock run up to a great extent in just a matter of a day or two. Unfortunately, we don't have any fundamental coverage on Borosil. I won't be able to comment specifically on this, but if I have to suggest an alternative investment idea, and firstly, Varun, I think 5,000 shares that this gentleman has bought, I don't know if it was a short-term bet that has gone wrong. Firstly, my advice is don't allocate a large capital to a particular sector or stock because that enhances your risk. Secondly, if I have to suggest an alternative investment idea, then amongst the NBFC gold loan companies, Manappuram Finance is something that I would suggest, that to not the entire capital. So maybe one stock could be Manappuram Finance, and the second one that I would recommend to add or switch over would be ICICI Bank from the private sector bank. And I believe next week is the time when we have the third quarter numbers from ICICI Bank. So I would advise a switch to these two names.
Okay, great. Thanks for that, Gaurang. So basically, it's a bit opaque at Borosil Renewables, and it's a small cap stock. We don't really know what's going on with it. So there are other investment avenues, and according to Gaurang, limit your allocation to such companies. Let's move on then. Pharma stocks. Sham Karani has written to us. And which MNC stocks in pharma are looking attractive? Please share names. So Kunal, I mean the whole sector, we have some great names here in India that are catering to US market, European market. But among the entire pack, which charts stand out to you the most?
Well, if I have to look at charts purely, then I would probably give more emphasis towards the large cap pharma names, and that would include likes of Dr. Reddy, Divi's Lab. I think these stocks are looking quite strong. Even Cipla, I think, is emerging out to be a strong breakout candidate. The stock took a lot of time to consolidate. So I think if your query is specific towards pharma sector overall, then I would recommend that look at stocks like Divi's Lab. I think the stock has already corrected some 10% from its previous highs. So also that's also a good entry point where you can look to enter the stock at current levels. Cipla is just broken past about that 800, 825 hurdle. This was a big hurdle zone for Cipla on the the medium to longer term chart. So there are a lot of opportunities. Frankly, Varun, in the pharma stocks. So if I have to just pinpoint the few large cap names, these are the 3 large cap names which the viewer could look at.
Okay, how about you, Gaurang? Which of these 2 names, Abbott as well as Sanofi, do you like better within the MNC pharma basket, or if there are any alternative suggestions you have?
So while Kalanya, I definitely concur with the view that MNC Pharma names which are listed on the Indian stock exchanges, there is no doubt that they have a very strong balance sheet, very strong presence in the areas that they cater to. And in terms of performance history, they have created wealth. Unfortunately, because of the regulation, I can't comment on either of these two names since we don't have a coverage, but I do agree that they are strong names. Alternative investment idea would be Cipla and Aurobindo Pharma. And these two names have performed quite well on earnings front as well as on product launches.
Okay. All right, there you have it, a consensus almost view on pharma MNC stocks. Query number 3 then, it's an email from Anil Dubey based in Lucknow. He wants to buy Wipro and he would like to ask if he should enter at current levels or wait for a dip in the stock. In fact, today as well, the stock has soared around 4% in trade. He, apart from Wipro, also wants to understand if there are any other IT stocks that he can look at entering at the current level. Short-term trading ideas is what he wants, so clear-cut time horizon there. Kunal, over to you first, Wipro, and if there are any other alternate IT names you'd like to recommend.
So yeah, I think Wipro, I believe even though the stock has rallied up 4% higher, but I still believe that it's an attractive buy. It's a stock which has gone through I would say a very strong shift of trend on the long-term charts. And when you see such strong, shift of trends on the longer-term charts, those stocks, they tend to just about continue to move up higher. You may have, few phases of corrections in between, but the demand for these stocks at every kind of a dip, becomes exceedingly high. So I think Wipro is a stock which I would at least place it, in that category. So if you get, a dip of, a few percentage points, 5% or 10% odd, take that as a good buying opportunity. Now, in terms of the other IT stocks, and I'll be very specific with, the recommendations on short-term charts. I think you can look at something like Coforge. The stock, I think, has corrected more than 10% in the last 10 days from 2,800 plus levels. The stock is now at 2,600. It's bouncing off from its 50-day moving average. There are some typical support patterns which have been emerging for Coforge at current levels. So I think it's also a good attractive risk reward to buy at current levels. Would expect a target of almost 2,750 on the stock price over the near term.
Okay, thanks for that, Kunal. Gaurang, I know you're positive on IT because I've heard you talk about it a few times, and we know, of course, Infosys is one of the better picks. So perhaps you can compare it to Wipro, and then, like Kunal just did, maybe share a couple of the second-tier IT companies which might also be a safe bet.
So, Arun, our ideas are purely on fundamental and long-term. So these are, since this investor is asking for short-term, let me be absolutely clear. These are all long-term fundamental ideas. I do agree that last 2 quarters, numbers from Wipro have shown tremendous strength and there is some meaningful turnaround. But if I have to pick amongst the large cap name, then the first one would be TCS, followed by Infosys, followed by HCL Tech, and then Wipro. Amongst the mid-cap IT name, there are a whole host of them. And as a brokerage house, as you rightly mentioned, Varun, we are extremely positive on IT and pharma. So mid-cap IT names would include 2 names, and we normally call it, you refer H2B2, that is HDFC Limited and HDFC Bank, and then you have Bajaj Finance and Bajaj Finserv. Similarly, one more twins you have is a form of L2, which is L&T Infotech, which came out with the numbers yesterday, stellar set of numbers. And today, I believe you will have L&T Technologies announcing the numbers. So we are positive on these 2 names. Along with these names, we have Mindtree, we have Cyient Limited. I concur with Kunal's view on Coforge. And of course, you have Tech Mahindra as well. So if you have to pick one name in the large cap IT, it would be TCS, I would recommend.
Okay. Thanks for that. So our viewer can rest assured you are given the go-ahead by our experts to invest in any of these large cap IT stocks, and you can also look at the lower tier if you are interested. Let's move on then, switch gears towards banking. Mihir Vora of Bangalore has written to us, and he's actually bought 200 shares of IndusInd Bank at 750. Congrats to him. He's made some money and he's held till now. Now the question is, should he remain invested or not? So, Kunal, what would your advice be to Mihir?
I think you should look to stay invested. The stock is taking its time to break past above a major hurdle zone. So, in terms of gap analysis, there's this huge resistance for IndusInd Bank around this 1,000 mark. So I think if I'm not wrong, just last month in December start, the stock had tried to break past about that 950, 975 zone. So, it's trying to, take some time to break past about this 1,000, odd resistance level for the stock. So, I would believe that it's a matter of time that because the large cap banking stocks are still showing signs of strength. You've seen those odd phases of correction and then these stocks are making a rally again. So I think if that's the case, then I believe IndusInd Bank would also surge past about that 1,000 mark pretty soon. So I would suggest a hold. And since you bought at an attractive price of 750, you already have a buffer. So I would suggest that the viewer can hold on. And about 1,000 levels is where I believe that the stock can head towards at least a 1,200 to 1,250 kind of a target range.
Okay. Gaurang, your view on IndusInd?
So extremely positive, Karanya, and the dark clouds or the overshadow in terms of the asset quality and concerns on certain loans that were given out, that is thing of the past, and that was one of the reasons why we saw the stock correct from 1,200, 1,300 to closer to 300 or 350, correct me if I'm wrong, during the bad times. And visibility is there in terms of the first and the second quarter number this financial year. And our sense is that the remainder of the quarters to come by is going to be even stronger. We would not be surprised to see the stock of IndusInd Bank scaling 1,000 plus levels and moving towards 1,200, 1,300 over a longer period of time. So stay invested and use bad days to add to the stock.
Okay. All right then. Thank you so much, gentlemen, for helping our viewers out and sharing with us your stock recommendations as well. Slipping into a break here, more updates lined up when we come back. Stay tuned. Welcome back. You're still watching Buy Now, Sell Now. Let's address some individual stocks in trade, especially that are triggered by important news flow. First up is Tata Communications. The stock massively sulking in trade following its Q3 report card. And another additional development that's keeping the stock under pressure today is the fact that the government is looking to sell residual 26% stake via OFS. Transaction is likely to be completed by March 20th. That's a statement coming in from Deepam. The sale is likely to be done via OFS and remaining likely to be sold to Tatas. If you look at the shareholding pattern right now, the government owns about 26.12%. Pantone Finvest has 35.8%, Tata Sons own 14.07%, and the public has 25.01%. As far as important FPI shareholders are concerned, you have the likes of East Bridge Capital, Baron Emerging Market, University of Notre Dame, even Rekha Jhunjhunwala, a big HNI name that is part of the shareholding. But let's move right on from telecom to aerospace. CEAT stock, on the flip side, continues to soar in trade. The company has clocked in a robust set of numbers in Q3. However, the CFO, Kumar Subbiah, raises a red flag over high raw material costs. Let's listen in to what the impact will be on margins.
We hope we are able to sustain a healthy margin. However, I also would like to mention here, in the last 2 months, the raw material prices have gone up. The raw material costs had gone down in the Q1 and Q2 of the last financial year. The beginning of Q3 onwards, it started going up. Okay, and so therefore, it could have some impact on our margins in Q4. Unless and otherwise we are able to mitigate it through some price increase. We have taken some small price increase recently, effective 1st of December, a small increase, and a small increase from 1st of January. But that is not adequate to absorb all the increase in raw material costs. So we'll have to see in terms of Q4.
Okay, that was of course CEAT, which reported a very good set of earnings, setting the road for the other tire companies as well. Maybe theirs will also be decent. But one stock which has recovered in the past 2 days quite heavily is Bajaj Finance. It's back at nearly 5,000 rupees, post that fall we saw to around 4,700 just 2 days ago, when some negative news came out about NBFCs requiring to possibly now get SLR and CRR But its results will be today, and a lot of questions will be answered by the management on a call as well. Let's first just walk you through what to expect. Now, we know that from the last quarter and from the quarterly update that loan growth has been a bit slow for Bajaj Finance of late, right? The AUM has improved Q on Q, but its YOY still not recovered completely to where we were last year. New loans have also slowed down slightly, 6 million versus 7.7 million last year. So that's a 20% drop in new loans booked during Q3. However, they are acquiring customers. They've acquired 2.2 million in the quarter gone by, and their total customer franchise now stands at 46.4 versus 40 last year. So commentary on growth will be keenly looked out for. This quarter, there's no point mentioning the NII and PAT. It's going to be a bit subdued based on what brokerages are expecting. 4,200 is the NII figure expected, down from 4,500 last year, and then the profits expected at around 1,200 versus 1,600 last year. Of course, your provisions are going to remain elevated like they were, but perhaps we'll see that taper off slightly this quarter, given that majority of stress should have been provided for. Also, just one more thing, deposits are growing at 18% at 23,800. So Bajaj has a lot of excess liquidity sitting on the balance sheet right now and a capital adequacy ratio of 28%. So some brokers believe that the NIMs might suffer this quarter because of all that excess liquidity that's not being lent out. So keep your eyes out on this one. Results should actually be out within the hour, I think just after 12 o'clock. So we'll be bringing you more on that fairly soon. So that was on Bajaj Finance. But L&T Infotech posted very good earnings yesterday. The stock gained today from pretty much the word go. It was up in trade in morning. We caught up with the management to understand what exactly happened this quarter and what drove such a good result. Let's listen into a slice of that conversation.
Yeah, thank you. It's good to be here. I think all pillars of our growth revenue strategy, that is growth accounts, invest accounts, new account opening, and large deals have performed well in Q3. We did open 22 new logos. Our growth accounts and invest accounts have done very well across the board, across all sectors. We have closed 2 large deals of around $280 million as well. All of that has helped us. Our win rooms continue to be busy, and we are seeing broad-based demand across the verticals. Let's talk about the second part of the question, which is what do we expect the net margin, for the company? As I said, please consider us as a growth company. We want to be seen like that, and we have stated guidance. The only guidance we give is on the PAT of 14 to 15% band. And if we want to have the aspiration of being in the leaders quadrant of growth, that gives us an automatic opportunity to increase the margin, but we want to fund and funnel it back to the business and grow faster. We've done one wage hike, which is effective January 1st. We will go back to normal cycle of July hikes and promotions as well. So, but we will be able to absorb all of that in that 14 to 15 band, looking at the pipeline of opportunities that exist for us.
Okay, moving on. Indigo Paints IPO opens up today for the street to subscribe if they like. Mubina joins us to tell us more about this particular public offer, what it entails, where the company has a niche, and more details to understand whether you should subscribe or not. Mubina.
Well, Indigo Paints IPO is open for subscription. It will make it the 5th listed Indian paint company. So let's compare it versus the other players. First up, the portfolio front. Up until now, we have seen decorative paints do extremely well. That's the reason why Asian Paints is a star performer. And of course, the brand name. I think a big plus point for Indigo is that 100% of its portfolio is decorative, as opposed to a Kansai, whose decorative portfolio is only 55%. Its dealer network is a little lower at only 11,230. In terms of capacity as well, it is smaller at 0.2 MMT versus an Asian Paints, which is at 1.73 MMT. And market share as well, perhaps for that reason, is at just 2% versus, of course, the market leader Asian Paints, which is 42%. But despite all of this, this one is the fastest growing Indian paint company in the last 10 years, delivering a 42% CAGR versus the market leaders, 13% CAGR in the last decade. The FY20 revenue growth, the 6-month FY21 revenue degrowth as well is much better than its peers. Gross margins are better than peers for obvious reasons, the fact that they have such a good specialty products portfolio. But the EBITDA margin is a little lower compared to peers, but that's because the company has been spending very heavily on brand building. 12.7% of its sales go into A&P as opposed to the industry average of 3 to 5%. The ROEs, though, are better at 24.3%, but valuations are very demanding at the upper end of the price band, 125x. This may have to do with the fact that, they're considering demanding a premium, because they are in a very high growing segment. They have a good amount of sales coming from another high growing segment, and that is smaller towns with population of under 4 lakh. So this is a company that may be small in size, but definitely fast growing.
All right, we also caught up with the management of Indigo Paints as their IPO is kicking off today. Let's listen to what they had to say.
Who of the foreign institutional investors and the domestic institutional investors interested in our IPO? And you rightly said they have not been troubled by the valuations at all. In fact, some of them have called up to say that they found the valuations more than reasonable, which leaves enough on the table for investors to make healthy gains post-listing, not only on the short term, but also in the long term. So we are privileged to have such a marquee list of anchor investors who have solidly invested in our company. And we are overwhelmed by the response that we have received.
All right, on that note, time for a very quick break on Buy Now, Sell Now. Stay tuned, we'll be back in a minute. Hi, welcome back to Buy Now, Sell Now here on ET Now. It's 11:54. We have the quiz question and answer we got to bring up for you. Our question to you this week was, under the Universal Immunization Program, which of these cost components has the highest percentage share? Syringes, cold chain, disease surveillance, or social mobilization? The correct answer was B, cold chain. We have 3 people who got it right. Bharat Sani, Nikhil, his handle is Nikhil140191, and Mani Kumar. Congratulations to the 3 of you. A hearty one at that. And we encourage you to keep participating in our quiz on a daily basis. And on that note, we're completely timed out here on Market Cafe on Buy Now, Sell Now, Thanks so much for watching. Keep it with ET Now.